there's certainly a moral hazard that exists when there's money being thrown at people, to have the courage to pump the brakes and say, maybe have a second think about it before taking it. And so I saw an opportunity to help companies. I worked at the SEC with small companies, particularly in the Office of Small Business Policy, where we've answered a lot of questions from practitioners and small companies, entrepreneurs on securities laws. And so I saw a growing need, an increased number of questions coming out of these types of issues. And plus, it's a fascinating space, and I love to sort of deal with uncertainties and function in uncertain areas. So this is sort of fraught with that.
You'll fit right into crypto.
Yeah.
Wendy?
I'm a senior manager for Deloitte Tax. I've been in this space for about 5 years. We advise all sorts of clients in the blockchain and cryptocurrency space on the tax implications of what they're doing. In the last couple of years, a big portion of our work has been in helping people who are launching tokens, but we also help exchanges, cryptocurrencies themselves, all sorts of and investors in the space.
I'm a partner of Fisher Broyles in the blockchain group there. Been in the space for about 1.5 years, and mostly help companies with ICOs, STOs, some funds, some exchanges. So like kind of a little bit of everything in the space.
And my name is Justin Wales. I run a firm called Carlton Fields Blockchain and Virtual Currency Practice. It's a part of a broader fintech practice. My background is really in payments, and specifically in the crypto side, we've been doing a lot on money transmission issues, although me and a broader group of securities lawyers at our firm have done quite a bit of work on the security regulation side, as well as dealing with several issues with the CFTC and other federal agencies.
Thank you, Justin. So the first question I have is for Zach. Zach, if all the companies are going to go from a jurisdiction standpoint, go outside of the US, does that make SEC irrelevant?
In a word, no.
Okay, why not?
Because the jurisdictional reach of the Securities and Exchange Commission, or the securities laws rather, there isn't necessarily, and there's some uncertainty in the case law, but from a statutory standpoint, there's no territorial limit to the application of the federal securities laws. They have interpreted through, the SEC has provided a safe harbor for the jurisdictional reach to basically when it's outside of, when there is no interstate commerce, or there are no U.S. persons involved, and everyone, that's the one everyone knows is Reg S, and that's sort of a safe harbor that says if you do these things, then even though we may technically have jurisdiction, we'll sort of acknowledge that that is an offshore offering, and we won't regulate it as an offering that needs to be registered. Now that's just the registration aspect, so that just relates to Section 5. But you definitely need to, you can't ignore the Securities and Exchange Commission just because you're overseas. The downstream effects, the SEC will, the analysis as to whether something is a security or not exists at the time you offer it, and it will be a security whether it's in Asia or Africa or in the US. And so how the thing flies around, when it touches upon US territorial jurisdiction in some way, then they will have...
Right, but in this case, hypothetically, we have Kumar LLC being incorporated in Malta, and I'm only going to sell it to non-US citizens. I'm not going to touch United States, I'm not going to do ads in the United States, I'm not going to do any conferences in the United States. I'll be just outside of the geographical boundaries. I won't come to Hawaii or anywhere else. Do you still think that the SEC has a reach or some kind of a find some way to come after Kumar LLC?
No, I mean, if it's truly as you said, all those things are in fact true, then you don't really have much to worry about from the SEC.
So I see today where a lot of founders come up and say, like, we want to follow the EOS model, we want to do that. So I feel that just looking in the last 6 months, where companies are incorporating in Singapore, in Caymans, and are actually bypassing the United States because they're looking for a less arduous way of moving forward. They're like, we don't want to haggle with whether it's a security versus utility, and they're developers at the heart of things. They're not lawyers. If you look at any other technology, if I was a Java developer, I can wake up at 9 o'clock, build a web page, and I'm not involving a legal counsel, I'm not involving a tax counsel, and I can create my web page and boom, I'm done. But specifically in the token sales side of things, we have this immense hurdle for the founder.
Yeah, I mean, I don't think that you can't avoid the potential that the federal securities laws will apply to what you're doing. And as I said, when I say that what I'm focusing on here is the thing that you're offering is if it is in fact a security, that is something that will follow whatever that digital asset is wherever it goes. And so you can be an overseas country, you can be an overseas entity selling to overseas people, and that's fine. That's pursuant to Reg S, assuming you're not doing directed selling efforts in the U.S. and it's an offshore transaction. Then you're fine from an offering standpoint. But that's just the offering. It doesn't affect the character of the thing that's there and that travels around in different people's hands. And so that's where you can run into trouble, or the people holding it can run into trouble. But I should see if...
And Kurt, just to add to that, not to get too technical, but Reg S actually has the regulations themselves, and then they also have notes. And the notes are supposed to provide kind of additional guidance. One of those notes specifically says that you're not going to use Reg S to evade registration. And there's guidance from back, I think, either 94 or 95 that kind of touches on talking about that. And then there's further guidance, I think, a little later that talks about internet offerings and how they apply. And if you look at that and you talk about it in the token concept, unlike typical equity sales, you are going to have a token that is sold, and it's going to get listed probably on the DEX within 2 minutes. And even if it's not on DEX, then it'll be on a centralized exchange very soon. And it'll almost immediately end up back in the US, which is exactly what Reg S deals with, is the flow not coming back into the US. And so there's a very strong argument that bottom line is any sale you do, it could be completely offshore. If those tokens come right back into the US, you've just done it to evade registration. And the answer might be, well, but from a tech perspective, we can't do anything about it. And the answer is you can, you just don't want to, which I get. Like, right, you couldn't stop an exchange, right? Because an exchange, they have the private ledgers, it goes all over. You could block the transfer, but then that's useless. No investor wants that. So the answer
if you geocoded it, or if you did on the KYC and said, like, hey, as a United States citizen, you're not allowed to purchase these, and if the US citizen then goes around it to a VPN or to whatever to purchase it, are we still is the company still liable after taking all of those due diligence steps?
They can't willfully turn a blind eye, and I think maybe we need to take a step back, and we're sort of dealing with hypotheticals, but there are sort of practical issues within the entire industry, which is people are structuring their ecosystems and creating their tokens because investors want a token that will eventually have liquidity. So they're bending themselves into pretzels, going all over the world, trying to stop the SEC from having jurisdiction. That's going to be very difficult. If what you're really trying to do is you're trying to build an innovative tech project, and you're trying to get funding for that project, you can do so through more traditional ways. The idea that you're going to go to Malta and then you're going to sell tokens to a fund that you probably know is controlled by people in San Francisco, it's eventually going to come back to you. Money is never easy. Money is never free, money is never easy. So at some point the regulations are going to come to you, and it's how far do you bend yourself in order to avoid what's eventually going to happen.
I mean, the basic idea is that the securities need to come to rest overseas. And what that means is again, highly fact specific, just like most things in this space. But what Justin was just talking about would be an example where it did not necessarily come to rest. And so the thing that, when I hear people talking about going overseas and there are U.S. company or U.S. persons who want to start something overseas, my general view is that at some point they're going to realize that the cost of avoidance is just greater than the cost of compliance. And I think people, generally, that could be like a slogan for the last year of what's happened in this space. You can spend all your money trying to avoid these things, but they're not going anywhere. They're not going anywhere. So at some point, that cost of avoidance is just going to be greater than the cost of compliance, and it's better just to build with these things in mind from the outset.
Got it. I want to touch a little bit on the tax implication side of things. So I'll use Kurt Kumar LLC, but in my mind I'm thinking EOS. So, but pretend it's Kurt Kumar LLC, okay? How does the tax ramifications happen? And maybe Wendy, you can tell us or help us. What is the best practices there?
Yeah, well, I think there are really good parallels in taxation or for the IRS is similar to the SEC, which is just because you're abroad doesn't mean that U.S. tax rules don't apply or don't somehow apply to your business. So, if you have a foreign operation, if you own an interest in a foreign operation, that can still subject you to tax on that foreign operation. With tax reform at the end of 2017, there's now a second anti-deferral regime for controlled foreign corporations. The first one was called Subpart F, and that was based on passive income and certain types of disfavored transactions. And now with tax reform, when you've got controlled foreign corporations, you have what's called the GILTI regime, which is the Global Intangible Low Taxed Income regime, which essentially subjects controlled foreign corporations to a minimum amount of U.S. tax. It causes a full inclusion with an offsetting deduction that's only available for U.S. C corporations. So you need to have a good tax advisor before you go in as an investor or as a business person. That goes to ownership, what we just talked about, but also where are your business operations? Because substantively, where you are operating your business should follow where you are incorporated and say you're operating from. So there are a lot of strong parallels with the securities regulations, and that substance should follow form. We don't want the tax the tax tail to wag the business dog in this case, and there's a lot of things to think about. One benefit, I'll just throw it out there, one benefit from the 2017 tax reform was a dividends received deduction that was enacted, and there's interest holding requirements, a certain percent interest, and there is a holding period requirement. You definitely don't want to operate without a tax advisor, but there were some benefits for people who earn income from foreign sources.
All things being the same, would you prefer or would you recommend somebody here to go to Malta or to go to Cayman?
I would never, yeah. I would say that needs to be a business decision. I know the regulatory regimes are different.
Let's say it's the same across the board. It's the same company, everything is the same, woman founder, well, there's an African American founder as well, and they're co-founders, utility token. Would you say from a tax ramification standpoint, go to Cayman or go to Malta?
The answer is that the tax consequences should not be the primary driver of that decision. Malta does have a tax treaty with the United States.
Yes.
It does not have a tax treaty.
Right.
And that is a key consideration in terms of whether or not you get permanent establishment protection, which is what level of activity is the threshold for causing a taxable presence. So there are tax things to think about in there, and that has to be weighed along with all the other business considerations.
Got it. I'm going to ask Justin and Marc, do you see founders come in your conversation? I know you do the legal aspects of it and not the tax side of it, but do you see founders coming to you from the angle and the very first call, we need to reduce our taxes, can you please help? Do you see that happening?
It's usually us going to them and saying you need to start thinking about what the tax implications of this, especially when you have situations like you have a fairly large team of marketers, developers, founder levels that are being essentially paid in these tokens, and you're not setting up any sort of you're not giving them any sort of guidance as to what their burden is going to be once these tokens actually become worth something or vest. So it's usually, unfortunately, people coming to us and saying, how do I do a token sale? And the conversation is sometimes like this, and it was more like this about a year and a half ago, a year ago. I have a really great idea for a token. And you go, okay, well, what's the idea? And they say, we want to raise $30 million. And you say, well, that's not an idea, friend. And they say, no, but we want to do it as a utility token because it's a decentralized, pick anything, a decentralized Facebook. Okay, so there's some utility. Okay, but you're selling to people because they think it's going to go to the moon. And the people who are giving you $2 million to start this are getting it at a 90% discount, and they're immediately going to dump it out. So it usually is people trying to avoid regulation, and then we don't even, in our firm, get past that point because we don't take clients like that. But when there is a token that's actually being provided, we push them usually to talk to our tax lawyers and come up with some structuring.
Would you turn down a customer or a client that comes up to you and says, I want to raise $30 million utility token, and not sign them on? I mean, is there, because sometimes financial retainership is also a consideration in taking the client.
So I think for me at least, so I've been in the space for a while and have seen a lot of bad actors in the space. So my goal with my practice and with what Carlton Field is trying to do is trying to get the space to mature and to adopt best practices. So in order for us to take a client, we vet, well, what are you really trying to do? Does your business model make sense? And oftentimes we find that there's no business model behind the goal of raising a token. So once we're confident that you're not just trying to evade regulation, that you're trying to create a product that's going to benefit the industry as a whole, at that point we can start working around, well, how do we do this in a compliant manner? But there's a lot of lawyers over the last couple of years who've made a lot of money giving bad advice to people who want to raise money, and it's eventually going to come back to them. So it's important, I think, to be the gatekeepers for the industry.
And I think that one of the important things to try to do as an attorney is somebody comes to you and says, I want to do a utility token sale. The answer is there's probably ways in which you can structure a sale that is more conservative than other ways. And there's probably ways in which you can structure a sale that, now I'll go the extreme example that frankly investors don't even want. But the bottom line is there's a way to structure it. There's a whole spectrum of different things that you can do with technology to actually create a utility token and to actually make it more appealing or less appealing, sell it in different ways, say different things. And ultimately it comes down to, sure, let's work together, but let's talk about how it is that you're going to go about this. And I have a few ways that I'm comfortable with, and anything else, the answer is that doesn't work, and so we're not going to do it.
You know what my test is if you go and explain to me your idea and you say you need a native token, and I ask you the question, can you create the same platform but charge Bitcoin instead of your native token, and the answer is yes, it becomes very difficult, I think, to call that a utility token.
Got it. 2 things you would recommend, we can start with you. 2 things you would recommend founders who are here and say do A and B, and 2 things you don't want the founders to do.
I don't want them controlling a Telegram channel without very clear guidelines of what they can and can't say.
So the founders should not control the Telegram channel.
Well, I mean, they shouldn't be making promises in a Telegram channel about the token value.
That's one thing not to do.
Yeah, and I think the thing to do is find a lawyer, make sure you vet that lawyer, and make sure that if you test them out. Ask them, if I paid you $50,000 for you to write an opinion letter saying that this isn't a security, and if they say yes, then you should find a different lawyer.
Got it. I was gonna say how do I vet a lawyer, but I'll pass. So you didn't tell me, so you said one thing not to do and one thing that you should do, which is obviously get a good legal counsel. Can you give me another one of thing not to do in your opinion?
Yeah, don't design a business whose main function is to raise capital, right? So spend a lot of time on the business model and figuring out what what the problem you want to solve is, and I would say at that point you're in a good place.
Got it. Are you for utility or security?
I mean, I think if you want to sell a security and you want to raise capital,
Personally, but like, what do you mean?
I'm personally I am for Bitcoin and
Okay.
and very little else.
Okay.
Yeah.
Two things, Marc, that you think founders should be doing, and two things they should not do.
I think the first thing is figuring out compensation in tokens and how they're going to do that right up front. Because if they don't, they're going to be screwed from a tax
So
perspective.
compensation structure, okay.
Compensation structure right up front on the tax. And then on the legal side, I'd say don't just go form an offshore entity and think that you're good, because you're not. There's different ways to do it, but don't just think that going offshore is the answer.
Got it. Let me just drill down right there. Which offshore jurisdiction you think is better?
I'm going to say here are a few that work. Malta,
Okay.
Cayman might work, Switzerland might work. Then I'm going to say, but this is going to be driven by your specific tax
Sure.
situation. But all of those jurisdictions are good. I would prefer not to use Malta.
Okay.
And the simple reason is, as a business, if you're really growing a business, you are going to receive way more scrutiny as a Maltese company than you are as a Swiss or Cayman company. And I'd probably go towards the Cayman more than Switzerland, because the Swiss are going to rip you off.
Got it. But even though, and you're saying that even though on the tax implication side of it, Malta only has a net 5% tax, but Cayman gets you to up to 20.
The answer's, that's the simple answer. The answer is going to be who owns the company, what are the percentage ownerships, what's the structure other than the Maltese entity. There's a whole lot of complications that go around that mean that you can't just say Maltese 5% is the answer, because that's not necessary.
Got it. So upfront compensation structure, and don't go about just dilly-dally foreign corporation. And are you personally utility or security? What do you lean towards?
I am, frankly, I invest in utility tokens.
Okay.
But in terms of representation, frankly, I just want it to be compliant. So let's structure a utility token properly.
Yep.
That's fine with me. Or let's sell a security. Whichever one, I just want it to be compliant.
What's your top 2 favorite utility tokens?
Really?
Well, I'm just asking.
I love all of my clients' tokens.
All right, Wendy. 2 things founders who are here who are thinking about a token sale. 2 things they should do and 2 things they should not do.
Yeah, I'm going to go ahead and echo Marc. I think you need to get tax advice as you start to have your business structuring conversations. Certainly, as you are thinking about going and signing any documents, if you're thinking about going and doing a raise, you need to have tax advice up front, and that includes compensation, that includes where you're going to launch from, that includes where your IP might be. And in terms of what not to do, you know, tax is sort of ambivalent about, you know, there's just tax consequences to what you do for your business. And truthfully, we have seen launches take place in a variety of ways with different tax costs, but it was, you know, in a lot of cases, the right thing to do for their business. So what we stress is, you know, get your advice, eyes wide open, and, you know, you'll find the right fit for you.
Got it. And personally, do you lean more towards security or utility?
I don't have a preference. Yeah.
Come on. Okay, top two utility tokens that you like.
Yeah, I'm gonna pass on that one. They're all good. I don't want to play favorites. That's not fair.
We're not recording it. Yeah, don't worry about those cameras. They're not recording anything. All right, Zach, what do you think? 2 things founders should do and 2 things founders should not do.
Well, 2 things being get a securities attorney and get a tax professional to help you.
Yep.
At the outset.
Yep.
That's just a no-brainer in my book. And what not to do, don't, sort of echoing the Telegram thing, be very careful how you're communicating to your audience.
Okay.
Communication's very, very thorny, a lot of tripping hazards.
Give me one thing I should not be saying in my Telegram. Should I not say, buy this token now, in 3 days it's gonna get 3x?
Yeah,
Right.
don't talk about your company. Talk about what you're building. If you're
Yep.
really building something, talk about it. don't talk about this thing as being a great investment opportunity. That is just ridiculous, frankly. Don't talk about that stuff unless you're willing to say it's a security. If you're going to say it's a security and you're doing that on Telegram, then you're already in the land of 506C. And so just embrace it, sell to accredited investors, and consider the thing a security.
Got it.
And that's fine. That's not a bad thing. But just, if you don't, and you're out there doing this thing already, then you already screwed the pooch.
Yep. Okay. Do you lean towards utility security?
I don't. I mean, I don't lean towards one or the other. I'm sort of agnostic. I love the idea of people building utility tokens. I have yet to really see many examples of that. So my default is I look at this from the lens of the securities laws, and so that's where I tend to see the super vast majority of these things falling. Many times because of the activities of the founders or the promoters, irrespective of the things they're trying to build. The one other thing I would mention to be very careful about is who your investor base is. I think the one thing that I've seen a lot of people, the mistakes they make is they take easy money from investors who ultimately have a different agenda than the company. And too often do I see the investors putting pressure on companies to do things with respect to liquidity or with respect to the way in which to capitalize on this investment they've made, such that the company is not ready for that, and they're not built for that. They're trying to build a company that has hopefully some utility, and what ends up happening is the investor base are doing things that are very different. Your interests are not aligned all the time, so just be highly cognizant of that, who you're taking money from.
Got it. Final thing that I wanted to give out to audience members is, are you guys giving 50% off discount on legal fees? I'm just asking, I'm promoting you guys. I'm saying like, hey, here's a good offer.
I'm on the phone all day with people,
So you're saying yes, 50% discount?
I say if you call me, I will talk to you, and I won't charge you for talking to me. Now, will I be able to help you and provide legal advice? No, because that would sort of be in violation of the bar rules. But
got it. All right. Well, here's another one. Because you're from the SEC, you know how Elon Musk got charged, fine, 20 million, 40 million, 20 million, I think.
20 million for the company, 20 million for him.
Right. So where does that money go? When the SEC gets that check, where does that money go?
Well, it goes to different places. I don't know the specifics of where that money went. There could be, because I just don't know the case. I haven't read it. That's what I mean by that. Oftentimes, the SEC, what people don't realize is the SEC is self-funded. So perhaps some of that money is going to fund the agency. We don't take money. Like I still work there. The SEC does not take money from the federal budget. It's sort of self-funded, and I don't think people appreciate. People don't often appreciate that the way in which they police is through regulation.
Got it.
The way in which they fund themselves.
I was almost going to tweet and say, hey SEC, rather than taking that 40 million in cash, why not just tell Elon Musk to go build $40 million worth of solar panels in Puerto Rico and then do it that way. But I kind of get your answer from there.
Yeah, and I'm a little dated on the self-funding thing, so maybe a lot of this stuff's happened in the last few years, so maybe that changed, I can't remember.
Cool. And now you guys here to help out the founders if they have any questions?
Yeah.
Sure. Awesome. Thank you. Thank you for enduring and taking my questions.
Can I just say, I love the event you put on, the one in Alameda on the Carrier, and this one. What great venues. How do you choose your venues?
It just shouldn't be called Hilton. And or that's it. Hilton. It shouldn't have Hilton anywhere in their name. All right. Thank you guys. Appreciate it.